So, hey guys, welcome back to the Tradfi and Bitcoin Club. So, we will be discussing about buying Bitcoin versus doing share buybacks. What should the companies do with their cash sitting idle on their balance sheets? So, yeah, I have shared my screen. I hope you guys are able to see my screen. So, I will run through the tweet which I have shared. It's there are some basic points, so I don't think it's hard to understand. It's pretty much self-explanatory. So even if you have some doubts, feel free to ask. So yeah. So this tweet is summarizing 10 options, but basically I will be considering the top three only because the 10 options which he has given capex and all that is like we are here to discuss about cash which is left after doing this all, like 4, 5, 6, 7, 8, 9, 10 options. These 1 2 3 are the only options which company uh, does with its cash reserves. Basically these 4, 5, 6, 7, 8, 9, 10 are the options which company does with working capital. So yeah, I will be discussing about top three only. So 10 options for cash on a corporate balance sheet. The first one is share buybacks. So share buybacks is basically what happens is like company buys back its own shares, which in turn decreases the number of shares and increases the earnings per share. And as you all know, like the valuations which we have in the markets is all about the PE multiple. So whenever companies do share buybacks, the earnings rise, EPS rises, so the price also rises. So yeah, the pros are increase in earnings per share, tax advantages, capital gains less than dividend tax. So this is one of the feature why companies have started doing uh, like buying back shares more often than giving a dividend, because uh, the taxes on dividends are more as compared to capital gains taxes. And yeah, the third point is no future commitment unlike dividend. So I think I have to explain this point. So what happens is like analysts in market value companies on their dividend track record. Like uh, if you see any company's dividend history, it's increasing, like it goes increasing, because there are some models which analysts have determined, like dividend discount model. So these models assume that dividends will rise at some given percentage till like perpetuity. They just assume it and calculate the present value of the share. So for example, if a new company who starts giving dividend, so market starts expecting them that they will continue to give dividend in the future also. So because of this, what happens, like there's a demand from the market analyst or the people who are pricing the share. They just assume that this company will keep giving dividends till perpetuity, and because of that, it's kind of a commitment for a company whenever they issue dividend. But in the case of buybacks, there is no such case of commitment. They can do whenever they want. And the cons is like signals lack of growth opportunities. So for example, a startup will never do a buyback because they need cash. They are growing, they are in high need of cash. for expanding, for growth. Yeah, so that's kind of a thing. So whenever a company starts doing buybacks or starts doing dividends, the internal need for the growth of the company is less. That's why they are returning their capital to the shareholders. So that is why companies consider share buybacks or dividends and things like that. So yeah, dividends. We'll come to dividends. Pros can signal financial health and confidence in future earnings. So dividend is given by mature companies, for example, Hindustan Unilever or BPCL, Bharat Petroleum, and mature companies basically. So they have high cash flows. So yeah, and they have some predictable earnings. So they give dividends. So they don't face any problem so far to give dividends. So what are cons? Typically subject to income tax. Yeah, this point has been discussed. Reducing or eliminating dividends can affect investor sentiment. So yeah, basically what I was trying to explain here. So when a company reduces dividends or eliminates a dividend, it it gives a picture to the market that something is wrong with the company. That's why they have reduced the dividend or they have eliminated the dividend. Yeah. So this is the case in case of dividends. And the third option with cash is like mergers and acquisitions. So yeah, what are the pros? So pros are rapid expansion and increased market presence, cost savings and revenue enhancements from combining operations, access new markets and technology. So these are pros. Cons are high cost, both transaction and integration risk, and management distraction. So I want to give a perspective like mergers and acquisitions. Most of the cases of mergers and acquisitions are like failures. There will be, if there are 100 mergers and acquisitions happening, there might be 70, uh, like 70 of them might be failing, or maybe more than that might be failing. Due to this, we have hedge fund guys who go long uh, on the company which is going to get acquired and short on the company who is trying to acquire some company. So basically, mergers and acquisitions are of a like give a less value to the shareholders of the company which is trying to acquire new companies and trying to experiment with the cash that is sitting on their balance sheets. So yeah, these are the three things which I wanted to discuss. So till now, if anybody has some doubts or some questions, they can ask, or else I will go to share buybacks in detail.
Um, yeah, like with respect to acquisitions, like there are companies, for example, Apple, it wants to buy a music company, it goes and acquires. So that is one
Yeah,
sort of acquisition. And there are also PE firms who their business model is only acquisition. So they acquire
yeah,
companies, and uh,
yeah.
then probably destroy the whole company, do something like that. So I just want to know whether that is all up to it or something more, some other types of acquisitions are also there in the
Yeah,
market.
basically, what you explained is like these are the acquisitions which happen, but uh, the success ratio of mergers and acquisitions is pretty less. So, what point I am trying to make is like unless you are sure shot successful about the deal, about acquisition, you don't you you try to avoid that and just uh, buy Bitcoin in your balance sheet. So that's what. that is what I am trying to build a context for the today's session. So yeah, there are pretty good acquisitions, like Google acquired YouTube. So from that point in time, YouTube has grown like crazy. So yeah, always in the markets there will always be exceptions, but yeah, if you consider a success ratio, it's it's quite less when you consider acquisitions and mergers. Yeah, should I should I move to the next part? Okay, so I'm moving on. So the next part is about share buybacks, part one of three. Content. What are share buybacks? Why traditional companies buy back shares? Section 1. When a company buys back a stock, they are repurchasing shares from a shareholder, converting them into treasury shares. Treasury shares are not a part of a company's outstanding shares, shares available, that is, shares available on the public market, therefore reducing the float or the number of shares freely traded by the public. So, yeah, this is what happens in a share buyback. So when a company buys back its shares, the free floating share, the number of free floating share reduces. So whenever free float shares reduces, the manipulation activity tends to rise. Because of this situation, in India we have a rule of, like, every public company should have I think 25% of their share total shares in the free float. So yeah, uh, share buybacks tend to increase manipulation done on if done in the large numbers. So yeah, section 2, traditional reasons for share buybacks: increased shareholder value. By reducing the number of outstanding shares, earnings per share may increase. Return of capital. Buybacks can be a way for companies to return money to shareholders, similar to dividends. Investors get cash for their shares for agreed upon price. Signal of confidence. A buyback often signals to the market that the company's leadership believes its stock has a strong future prospects. So yeah, a buyback often happens at a premium to the market price. For example, the market price of Reliance is, for example, hypothetically is $2,000. Sorry, 2,000 rupees per share, and buyback will happen at, for example, $3,000, 3,000 rupees per share. So company is buying back its share at a 50% premium. So this shows the market that Reliance management is positive on the company's future growth prospectus. So yeah, this is one of the reason why companies do share buybacks. And fourth one is tax efficiency. Buybacks tend to be more tax efficient compared to dividends. Shareholders only incur capital gains taxes when selling shares versus income tax on dividends. So as far as I know, in India, I think dividends are taxed on a slab rate. So if you fall in 30% slab, dividends will be charged at 30% slab. And in case of capital gains tax, it's capped up to 12.5%. So yeah, use of excess cash. Companies with excess cash might choose to buy back shares as a method of using this cash effectively, particularly if they see limited opportunities for productive reinvestment in their business. So this is the fifth reason, like companies with excess cash might choose to buy back shares as a method of using cash effectively, particularly if they say, yeah. So if they see limited opportunities, so limited opportunities means they are kind of a mature company, and they don't have to invest in R&D, or the innovation part is less in their business, and they are just trying to, like, cash sitting on the balance sheet has a drag. As Michael Saylor says, if cash is sitting on the balance sheet, it's negative 5%. So yeah, that's why companies with excess cash do buybacks. Conclusion: buybacks increase EPS has been an important motivating factor. Buybacks also can make sense when cash on the balance sheet is not helping to grow the capitalization of a business. If the purchase is eroding on a balance sheet, it's better to return it to investors while increasing the value of the shares. So this is a picture which tries to depict like what's happening while doing buyback. So I will come to this part later. Like he has discussed some micro strategy at that part. So yeah, till
So
now, yeah,
there is also some role like top level executives uh,
yeah, yeah.
are
They have
more
incentives.
share
Yeah.
buybacks because their
Hmm.
performance linked incentives, right?
Yeah, yeah. They have incentives of, I think, if share price goes to this, they will receive some more compensation. So it's a method for them to get incentives. So that's the reason I think board of directors should understand Bitcoin, and uh, what what buying Bitcoin on their balance sheet can bring value to the shareholders, and it will help. Uh, the sole reason of like maximizing shareholders' wealth is the goal of management, board of directors, and yeah. So this is a primary goal, like maximizing shareholders' wealth. Like Bala mentioned, which is not happening in this case. Like people in the management tend to do buybacks and push, like inflate the share value, which in turn like gives them some compensation. So this this happens in the markets. Like this is the these are the things which happens in fiat world. So yeah. So I am going to the second part. So in the second part, he has taken some examples, like significant historical examples. So Apple is the company who keeps doing buybacks like pretty much every year. So yeah, Apple started buybacks in 2018. Apple initiated a world record of buybacks of $100 billion. So in the fiat world, buybacks are one of the best ways to maximize shareholder value. But as we have Bitcoin now, so I think Bitcoin can help. Can help. Bitcoin is much better way than buybacks for companies to park their cash reserves. So yeah. So here he has taken a example in 2018. Apple initiated a $100 billion buyback, which in turn was a world record. Apple has performed the following buybacks: so 75 billion in 2019, 50 billion in 2020, 90 billion in 2021, same in 2022 and 2023. So Apple's earnings per share are tabulated below. Clearly, since Apple started their buyback program, there has been a steep increase in EPS. So see, in 2013, the EPS was 1.42, 1.61. It's like going from down to up, like 1.42, 1.61, 2.31, 2.08 till the way. So like first buyback was done in 2018. So 2018, 2.98. And see the growth. Like after 2018, it's the growth is kind of significant because of these artificial buybacks. So I think he is trying to explain this point. There has been a steep increase in APS after 2018. So if you can see after 2018 2.98 till 2023 of 6.13. So this steep increase is highly manipulated by Apple's management and Tim Cook. So they might be receiving some incentives as Bala mentioned. So yeah,
Just a quick question, Digant, if it's okay.
yeah, yeah,
So I think is that the major reason that big tech stocks are like overvalued right now because
yeah,
most of
yeah,
them,
yeah.
like
This is
Apple,
the
are too
major
old,
reason. Like
right?
why are they trading at a crazy P multiples? So
Right.
yeah,
Yep.
yeah.
Yep.
So the second example is of Microsoft buybacks. Microsoft started its buyback in 2004, $75 billion plan that included one-time dividend and a regular share repurchase plan. So after that, they have been doing buybacks like 40 billion in 2006, same in 2008, 2013, 2016, 2019, and 2021, $60 billion share buyback program. So this has
So,
helped them. Yeah,
while doing the buybacks, will there be simultaneous issuance of new shares happening, or it's like some sort of a closed scheme where like you deal only with whatever was issued earlier, and once you announce the buyback programs, there will not be any new issue. Is it so, or
no,
it happens
that's
both?
that's not the case. New issuance keep happening, but new issuance as compared to the, I mean, buybacks is pretty huge. So buybacks are pretty huge. New issuance are like minuscule, like ESOPs and those kind of things are only the new issuances. The traditional companies do not issue stocks more often as compared to like what MicroStrategy and Bitcoin treasury companies are doing. So yeah,
Okay. So these ATM kind of things are only like happen rarely,
only
but because
only in the
MicroStrategy.
Bitcoin treasury companies. Yeah,
Okay.
because there is no incentive to, I mean,
Dilution.
buy. Yeah, yeah, dilution will happen if they issue new shares and where they will put the newly raised cash. Like they are doing buybacks because they don't have anything to do with that cash sitting idle on their balance sheet. So issuing shares and raising cash is not like they are not trying to do that.
Okay.
Yeah. So this was a Microsoft example. So in the conclusion, it's very difficult to determine the impact that share buybacks have had on EPS for both Microsoft and Apple. Nevertheless, both companies have employed significant buybacks programs over the past 5 to 10 years. The next post will explain why Bitcoin balance sheet does not need to buy back shares and can instead increase sats per share, effectively paying a tax-free Bitcoin dividend. So yeah, so I want to like expand on this point. Like, whenever a buyback is happening, the people who uh, like choose to sell their shares to the company, they have to they have to pay capital gains taxes uh, on that amount. So that's buying Bitcoin will be more tax efficient way, like tax free Bitcoin dividend. So yeah, buying Bitcoin will be much more tax efficient than share buybacks. So if you want like dividends will be the least tax efficient, then will come share buybacks, and then after we'll have buying Bitcoin. So yeah. So let's go to the third and final part. MicroStrategy is Bitcoin dividend. So yeah, share buybacks part 3 of 3. When Apple holds cash on their balance sheet, they can either reinvest in the company, buying productive assets, acquiring another company, etc., or issue dividends or buybacks. The diagram below serves as a visual representation of Apple buying back outstanding shares using their fiat balance sheet. For MSTR to conduct similar buyback, they would have to give shareholders Bitcoin for their shares. So here he is trying to explain, like, here these are outstanding float shares which which Apple like buys back these outstanding float by issuing the by giving the cash to these shareholders who are ready to do, and they keep these new bought like keep these buyback shares as treasury shares. So as we have Bitcoin in treasury, they keep shares in their treasury. So as Shreyan said, the point, like, this is the reason why, like, the float keeps on decreasing and manipulation rises, and this is the reason why these Mag 7 companies like Apple, Microsoft, Google, Tesla are trading at a crazily valued P multiples. So this is one of the reason. For MSTR to conduct similar buyback, they would have to give shareholders Bitcoin for their shares. So the diagram below serves, yeah. But would MSTR do that? Time will tell. The point of holding Bitcoin on a balance sheet is to reap the accretive rewards of Bitcoin. MSTR will continue to increase the Bitcoin per share. This is a key metric. Shareholders continue to hold their shares. So yeah, I want to expound on this point. Like, we as Bitcoiners, as Bitcoin maximalists, whenever we invest in companies like MicroStrategy or Semler Scientific or MetaPlanet, we look onto KPI, which is known as Bitcoin per share. Like, we don't care about we are getting diluted and uh, we will eventually hold a less percentage in the company. We are just focused on Bitcoin per share. Like, MicroStrategy will do anything. Like, they will even issue more shares uh, if the conditions are favorable, and increase our Bitcoin per share. So Bitcoin per share is the key metric which we as Bitcoiners look in these companies. So yeah, MSTR continues to leverage corporate debt to buy Bitcoin, and shareholders increase the number of Bitcoins per share. This is effectively a exempt Bitcoin dividend, a revolutionary way of distributing value to shareholders. As as a shareholder, you benefit not only from increasing in Bitcoin price, but also the acquisition of more Bitcoin by MSTR. So this is what I mean. He has explained, but I don't see, like, this tweet was around 8th May of 2024. So this is pretty old tweet. So at that point in time, like, currently strategies MicroStrategy strategies is much different. Like, they don't whatever he is trying to explain here, MicroStrategy just buys back dividend instead of these buying back shares from the market and decreasing the float. MicroStrategy just buys Bitcoin, and even now they are issuing debt like convertible bonds, Strife, preferred stocks. So yeah, this is what strategy is doing, and maximizing shareholders' value uh, in the. This is what basically what they are doing. So yeah, that's what that's it from my side. So this is basically which I wanted to explain today. So if somebody has a doubt till now, they can unmute themselves and uh,
Yeah, just a basic question, Digant. What exactly are float shares? Why is it called float?
float shares are basically the number of shares which are freely trading in the market. So, for example, a hypothetical company Reliance, for example. So, Reliance promoters Mukesh Ambani is holding 75 shares, and 25 shares are freely trading in the market. So, these 25 shares will be considered as float shares. So basically, the pricing, what price you see in Zerodha or Upstocks, this is because the demand and supply of these float shares. So I hope I have made an answer to your question.
Yes, yes, thanks.
Yeah, and what's happening in case of Apple and Microsoft? They are decreasing these number of shares, these number of float shares. So whenever uh, the number of float share decreases, the amount of capital required to manipulate the share price decreases. Like uh, this is because with less amount of capital, you can manipulate the share price. Like if there are like only 25 shares and Reliance Mukesh Ambani buys 10 of them, there are only 15 shares which are trading in the market. So 15 shares into whatever the current price, for example, 100. So 15 into 100, 1500. So even if Mukesh Ambani buys another 100 rupee worth of shares, that will push share value more higher. So this is basically this will increase manipulation in the markets.
Hmm.
So that's why we have a law in India. If you want to be a public company, you have to have 25% of your outstanding shares as free float shares. Yeah.
Right. Yeah, the percentage of free flow shares, if it's higher, it's less prone to manipulation, right? Because
Yeah.
those
Correct.
shares are floating
Correct.
in the free market.
Yeah.
Right.
Yeah. So till now, if
So
anybody
when the
wants,
company buybacks the share, are these the shares which are bought back? Are they like deleted from the company's register, or they move from the float shares to like non-float shares? They can be issued they can be issued to public later.
no, they go into treasury. They can't be issued back to the public later. Basically, it's like burning. They go to
Okay.
treasuries and then they
Okay.
cancel out like all voting rights and all. They just they are just burnt.
Okay.
Yeah. I have some more material, like if you want to go much into detail, like I have some material from my CFA studies. So if you guys are curious, I am happy to share.
Yeah, sure. You can share in our group. We can.
Yeah.
Okay.
So this is what there are types of acquiring shares also from the market. So these are some share repurchase methods. So one is open market transaction, second is fixed price tender offer, third is Dutch auction, fourth is repurchase by direct negotiation. So I think this guy has not given what happens after companies buy back the shares. Yeah, this guy has not given the buyback. I will share the screenshot because this is a Schweizer material, so this can be shared publicly. But uh, The CFM Institute material, I can't share it here. So I will share it to in the maybe group or personally if you want. So yeah, that's it from my side. I think Lala, you can take over the stage and uh, introduce yourself and the website and yeah.
Thanks. Yeah. Thank you, everyone. I learned a lot from that. Actually, I didn't know a lot of that. Can everyone hear me and see my screen?
Yeah, yeah, you are audible.
Okay, great. So I'm sharing my screen. It just shows a simple graph of Bitcoin. This came from Pierre Rochard. Bitcoin is for governments, corporations, and individuals. I basically made the Buyback website. Obviously in the category of Bitcoin being useful for corporations as money. And of course, the beautiful thing about money is you don't need to uh, analyze, what is the best equity or stock in the market, what's the best investment, what's the best return on my capital, or should I go into R&D or working capital? You can avoid all of that analysis if you can just trust that there's a good money that will hold its place, and that you can reserve your optionality and you can make a decision later rather than trying to diversify or try to make the best analysis immediately. You can just store the energy in money. And so what happened was I signed up for a hackathon and I had never really coded anything because it was an AI hackathon. And so you're going to use an AI coder. And so I thought, in preparation for the hackathon, what's an idea that I can practice on and that I can code as practice. And so uh, I made Buyback as the practice in probably within like 24 hours before starting the hackathon, in which I made credbitscore.com. So if you go to BitBuyback on x.com or Twitter, you can see that I've actually tweeted out the prompts that I used in Grok ask ask it, how would I make uh, a website that calculates a Bitcoin credit score. So that's actually for the real hackathon I did that. But for the practice, Bit Buyback concept occurred to me because of Michael Saylor and what he did for Microsoft. Getting time with the board of Microsoft, in their shareholder meeting to give a 3-minute pitch for them to use Bitcoin as a treasury asset is just an absolute masterclass. I mean, if you haven't watched this 3-minute video, definitely go back and take a look, and we'll link to it in the Discord. But I don't know if I play a video, if you can hear the audio and if the resolution will be great. So I'm not going to play it. But what I did find is the slide deck. And so can you guys see this Microsoft has a choice to make slide? Just want to make sure that you're following me on my screen.
Yep.
Yeah,
Yes.
Okay, great. Sorry. So, oops. So I've maximized it too much now. So Microsoft has a choice to make. So this is what Saylor outlined to Microsoft, to their board and shareholders meeting. One other thing before what Saylor did for Microsoft, one thing that was kind of in my head, and I don't know if this is true or just a rumor, but I had heard in the past that IBM, if you look at all the buybacks IBM has done in its history, that they added up to more, at least at one point in time, I don't know about today's price, but the buybacks added up to more than the entire market cap of IBM. So in other words, they generated money and then they didn't know what to do with it. Like as you said, if it signals low growth because you don't have a startup doesn't do buybacks because it has so much other places to put capital to make to acquire users and to develop new products and to grow things, that IBM was basically so stale and just so non-innovative that they just kept buying back shares, and they actually spent so much buying back shares that it was more than the entire worth of their company. And just think about that for a minute. Like that means that they, that the they spent more than their entire company was worth just re-buying their company. Like it blew my mind that like it's kind of like a waste. Like it's like spinning your wheels, right? So they're just making money so that they can essentially do this executive bonus. How does the executive? If an executive does a good job, then they have excess cash on the balance sheet, and then if there's excess cash on the balance sheet, they buy back shares, which takes it off the free market. Which, when there's less supply, then there's more higher price, and so then the share price goes up. Executive hits his bonus number, and then the executive gets paid. Of course, everyone benefits a little because there's less stock in the free float, like you saw, and so all shareholders benefit a little bit, but mostly the executive benefits because they get like a huge allocation of stock in their bank account, when they hit their number. So they benefit exponentially more than the average shareholder does. So Saylor kind of outlines this briefly in a few slides to Microsoft, saying stick to buybacks and dividends and treasury bonds, or embrace the future, use a financial strategy like Bitcoin as a capital asset. They can continue divesting 100 billion yearly, basically admitting we don't know what to do with this money, so we're just going to put our own shares on our own balance sheet. And if there was a reason to do that, if it was like, okay, we need more shares so that activist investors don't buy them up and change the course of the company, then that's a legitimate reason. But mostly it's just like, we don't know where to put this money because we can't grow. Even if we threw this money at growth strategies, we still wouldn't grow. So, or they could invest the 100 billion into Bitcoin, which would decrease. If you look at Bitcoin as a risk-off asset, it decreases investor risk and accelerates growth because you grow along with Bitcoin. And so here he summarized.
Sorry to interrupt you. So, can you just move a little closer to the mic? Your voice could be a little better if possible.
Oh, I'm sorry. You know what? I'm using. Let me just switch to my regular microphone. Okay.
Yeah, you are still audible. That's not an issue. I'm just, if it's possible, then it's fine. Otherwise, please continue. Lala, in case you're speaking, we can't hear you. Or at least I
Yeah,
can't.
Lala, we
Yeah.
can't hear you. You can go back to the previous mic. Like it was
Yeah.
audible, but now you are completely off. Or maybe you can try like joining in once again. Like
And you should just like write in the yeah, you should just write in the chat.
Yep. Nala, if you can hear us, so whatever your previous microphone was, I think that was good. So if possible, just please.
Yeah, I don't think he can hear us. Like,
Okay.
Come back to your laptop's mic. Yeah. Or maybe Lala, you can just, you can join by your mobile, and I will share your screen and share my screen, and you can guide me like what I have to do. Because,
yeah, you should just like write in the chat.
yeah, I think he heard us.
Yeah, he's talking, but he's audible now. Is
Do you
he?
hear me now?
Yeah,
Yeah,
you are.
yeah, wait.
Sorry about that, guys. I tried to switch mics and then that did not work at all.
Okay, great.
Okay, so like I was, so where I left off was Saylor. Saylor made a great case for Bitcoin on the Treasury, and I loved what he did for Microsoft, but it wasn't scalable. Like there's a lot of companies that have cash on their balance sheet, a lot of companies that decide to do buybacks, and so I wanted to um, scale that and do that for every public company. And so the way that I conceived of that was to make a website that pulls in public data from Yahoo Finance and it lists the top 100 uh, top 100 publicly traded companies that have in their public filings that have done buybacks. Now, as you had reviewed just earlier, there are several ways to conduct buybacks. And since I did not know exactly which way each company did, I didn't know like exactly. So what happens is the company says, okay, we have $10 billion and we're going to buy back shares. And they say that on a certain date, they file that with the SEC. And so what I did is I used that amount that they announced for this first example, 3M is 24 billion. And I looked at the date of that announcement and I grabbed the historical stock price. Now, this isn't really what happens. They don't lock in on that exact day and spend all 24 billion at that exact stock price. But I just did a multiple and calculated what was the how many shares would they have had at that historical price, and then what is the current price and of those shares. So for 24 billion, $107 share price, they would have had 2.24 billion shares, and then the current price is 148 per share. So now that means they've, that it has the share price has gone up, so that buyback has been successful. However, if you look at the Bitcoin historical price on the date they announced the buyback, and then the how many Bitcoin that would have bought with that amount of capital, and then you look at the current value of that Bitcoin, you would see that here's 95%, almost 100%, so double. They would have had the shareholder would have had double the money that double the value that they realized from the buyback. So it's a proxy, it's an estimate buyback amount, but it's it's theoretical. But only the company knows, or it would be take a lot more analysis and digging to find out what was the exact number of shares that they received for their announced buyback. So not an exact science, but I thought it would, give a ballpark, sort of a ballpark figure. Um, And so here's the live site. If you go to the Bitcoin Buyback net, I don't recommend you do it right now because it might crash the site. I'm not sure how robust the server is, but if you scroll to the right-hand side of the table on the main page, you'll see a generate button, and the generate generates a little. What I saw that this could be maybe like a tool for financial journalists or for financial analysts, and that they might want to basically have a verbal explanation of everything that I just ran through by reading the table to you. So 3M announced a stock buyback in the amount of 23.8 billion on April 17th. On that date, Bitcoin was trading at 28,000. So their treasury could have acquired 838,000 Bitcoin. Oops, I just reloaded the page. So it basically just gives a verbal explanation of how the logic works. And my idea was that they could, this information could enlighten shareholders to say, wait a minute, I'm not too happy with the value I received from that buyback because I could have received much more value from a Bitcoin treasury purchase. And so whether that's analysts, journalists, or shareholders, they would have, learned something from that analysis. And then another interesting thing you can do is click on the particular stock, either the ticker symbol or the name of the company, and that will go into a page that looks like this. Right now, my website isn't loading because it's probably freezing. But here I've clicked on Apple, and that from that front page template table. And this shows basically the decision tree. So you've got at the top, Apple had 90 billion, and what would they announced a buyback in the amount of 90 billion. That was the capital that they could have made other decisions with. That bought them, according to, again, my proxy calculation, at the share price of the time of this announcement, that would have bought 500 million shares on the open market. And that current share value of those shares at the today's Apple price would be $23 billion. So they're up 37%. The share price or on the investment of their buybacks, that investment is up 37%. That's pretty good. But if you took that 90 billion and you bought 3.1 million Bitcoin with it, according to the price of Bitcoin on that date, then you would have been up 175%, which is almost triple your money instead of 40%. So that's Bitcoin outperformed the buybacks by 138% or $124 billion. So this just kind of gives like another different visual analysis if you like decision trees or if you like following the logic this way. I thought that it was a nice format to look at the decision tree. And that's really it. Like I wanted to make this site as a tool for people to understand the theoretical, because there's a lot of tools like BitcoinTreasury.com, which shows Bitcoin companies that have Bitcoin on the balance sheet and their performance and how great it is, and that's nice. But what about all of the potential corporations that we could orange pill who are out there who have a lot of money? And not all of this is for number go up. I mean, it is also for helping these companies get out of this cycle of being zombie companies that have no growth prospects and no Metaplanet falls into that bucket kind of. They got hit hard by COVID. Their business was suffering, and luckily they chose Bitcoin Treasury, and now their company value is still valued really well because they you know they were able to preserve their financial energy. So yeah, that I would love for you all to go check out the site and play with it, and see if you have any suggestions about it. And I also wanted to inspire India and the publicly traded India companies or the Bitcoin community in India to do the same for your public companies. I think it would be really fun to work with some of you to whip together a hypothetical Bitcoin treasury for India, if there's any Indian companies doing buybacks or share repurchasing, or just have treasuries. basically it's like orange pilling your friends, except you can see their bank statements and you can see how much cash they have on hand. So it's a lot easier to do the analysis for them. And that's really all that I have. If there's any questions, I'm happy to answer.
Great, great. So I just wanted to add, like, if you could add a calculator type of a tool in the website wherein, um, I mean, just the management or the analyst has to calculate, like, people in Tradfi will go into Bitcoin first gradually and then suddenly. So to take small steps, they might need a calculator wherein just you can just put like, for example, what happens if 10% of the buyback amount will, like, 10% of the amount will buy Bitcoin and 90% amount will go to their traditional ways of doing buyback, or 20%. So this kind of a calculator tool addition to this website will be good. I mean, from my perspective.
Okay, yeah, that's interesting. Yeah, so they might want to do other besides just 100% analysis. Yeah.
Hmm.
In your opinion, like what has been the impediment or hurdle uh, for companies, and obviously with after MicroStrategy picking up, but still large corporations are very reluctant. So, like, what do you think about it? The one argument is that MicroStrategy is a very unique, is in a very unique position, and difficult to repeat MicroStrategy's strategy.
Yeah. So, like, Lala, do you want to take, or I have an answer to this question, so maybe I can.
Sure, go ahead.
Yeah. So, I mean, Bala, there are pretty few problems. Like, only in the Magnificent Seven companies, only Meta can do what strategy has done. This is because the voting rights. So, whenever Mark Zuckerberg will turn into Bitcoiner, then currently only he has the power to. Lala, maybe you can mute your mic.
Sorry about that.
Yeah. So, so yeah, what I was trying to explain is, like, currently only there are very few founders or very few companies who have the voting rights needed to transition a traditional company into a Bitcoin treasury company. So currently only Meta has it, and as we all know, Microsoft had like, as Lala was trying to explain, Saylor gave a 3-minute talk to Microsoft shareholders, like, why should they consider Bitcoin into their balance sheet, but, like, the there's like, voting has to be done on this topic, and whenever voting happens, the shareholders which have like most amount of the voting percentage, currently we don't, like, unless and until every shareholder of MicroStrategy is Bitcoiner, uh, then only this type of things can be done into the traditional financial companies. Like, currently we don't have voting power. Like, for example, even if Apple co-founder or Tim Cook turns Bitcoiner, but he doesn't have the voting rights to transition the company to acquiring Bitcoin. So yeah, the education is lacking and voting power is also lacking. So that's the main reason, and board of directors should also consider it. So what happens is, like, all retail votes are put according to what board of directors say. So, for example, I am holding a MicroStrategy share. So, there's a voting mechanism. Like, if I don't vote, and generally retailers don't vote, they are just buying their shares. Like, do you remember voting for a AGM, or like last time? When have you voted? Like, generally retail investors don't vote. So
Yeah,
what happens to their vote? Their vote is voted the by the intermediary who is holding their share, by the custodian, and custodian votes according to the board of directors guidelines. So the guideline which they have given is anti acquisition to uh, anti Bitcoin. So this is the main thing. Like, currently we only have Meta, and in the case of GameStop, I think Ryan Cohen was also having around 50% of voting rights. So that's why GameStop came into the picture, and they are looking to transition into Bitcoin treasury.
that was new information. I never knew that if I don't vote, the custodian votes for me.
Yeah, custodian votes for on behalf of you.
Yeah, I think that